understand QuickBooks, it is necessary to have a basic understanding of some accounting concepts prior to entering information into the program. The first concept to discuss is the chart of accounts. A chart of accounts is a listing of all of the accounts used within your company file. You can open the chart of accounts by selecting Lists, then Chart of Accounts from the menu bar. Your chart of accounts shows the names of the accounts used by your company, the account type, like income or bank or one of the many other account types, and the current balance of the account. There is a column called Attach, which shows any attached documents associated with the account. You can double-click this column to open a dialog box that allows you to attach documents from your computer, from a scanner, or from the Doc Center for free. These attached files are stored locally on your computer in QuickBooks. You will now examine the general account types found within the chart of accounts and how they are organized. The chart of accounts has a default sorting method. Assets are listed at the top, followed by liabilities, and then equity. These accounts are also shown in the balance sheet report for your company. Following these accounts within the chart of accounts window are the income accounts, followed by the cost of goods and expense accounts. These accounts will appear within the profit and loss report. At the very bottom of the chart of accounts are accounts used for non-posting transactions like purchase orders and estimates. As mentioned before, at the top of the chart of accounts window, you will see the balance sheet accounts, which appear on the balance sheet for your company file. These accounts show what you own, your assets, what you owe to others, your liabilities, and the difference, which is your equity. Below those accounts, you'll find the income and expense accounts, which track where your money comes from and what it is spent on, respectively. Each balance sheet account has a register associated with it. Unlike the balance sheet accounts, the income and expense accounts each have a report that lists the transactions associated with that account. We will look at these types of accounts in more detail in later chapters, but we will now review a general list of the different types of accounts shown within the chart of accounts and whether they appear in the balance sheet or the profit and loss statement within QuickBooks. First, you have assets. Assets are what you own and what other people owe to you. More specifically, the money that people owe you is called your accounts receivable, or AR. Other assets may include checking account money, inventory, fixed assets like computers, and undeposited funds from customers. Also note that when you set up your company file in QuickBooks, although checking, savings, and petty cash are all company assets, you'll set them up as bank-type accounts in QuickBooks. The available types of accounts that are assets are bank, accounts receivable, fixed asset, other current asset, and other asset. Liabilities are what you owe to others. The unpaid bills that you have are specifically referred to as your accounts payable. A liability can be a loan, an unpaid bill, or taxes owed. Also note that when you set up your company file in QuickBooks, although credit cards are company liabilities, you'll set them up specifically as credit card type accounts in QuickBooks. The available types of accounts that are liabilities are credit card, accounts payable, other current liability, and long-term liability. Equity is the difference between what you have, your assets, and what you owe, your liabilities. The basic formula for calculating equity is assets less liabilities equals equity. Equity is seen as representing the health of your business. Equity can come from three different sources: investor money, current year profits, or retained earnings, which are profits from past years that haven't been distributed to shareholders. The only available type of account for equity is the equity account type. Now, the profit and loss accounts include the income accounts, which are used to track the income generated by your company, and the expense accounts, which are used to track where your company's money was spent.